Hey, what's up, guys? Welcome to the premiere video of the Modern Traders YouTube channel. I'm Ben. I'll be your host representing Modern Traders. First of all, I just want to say thanks for checking us out. I know there's got hundreds of these stock channels at this point, so we're going to do our best to be a little different from the other guys. Two main points that'll hopefully set us apart. Number one, we're real people. We're just regular retail investors. We're not millionaires or stock gurus or guys telling you how easy it is to make $1,000 a day in the market and then conveniently leaving out that it took them $30,000 investment to make that, which, 2-3% gain, which personally I would starve on if I was making that small of gains. But, hopefully we'll be able to set us apart from those guys. And you're gonna have to excuse the cuts. It's my first video, guys. So anyway, the second difference is that while the established institutional, old school guys will tell you that the last year has been a phase in the market. Um, we acknowledge and embrace the fact that it's not. It's the market is evolving, and as traders, we got to evolve to survive. We got to evolve with it. I mean, things like the power of FOMO. The YOLO plays, the Reddit. Come on, guys. I mean, it's a whole new animal. So, that basically our job is going to be whenever we see a potential pitfall or a opportunity coming up to give you guys a heads up, make sure that the little guys got a level playing field to work with. So if you've been paying any attention at all to the market, you know that the uh, just epic graph above me ticking away is GameStop short squeeze just recently. So uh, that brings me to the topic of today's video, the short squeeze, how to play them. Perfect because it's both a potential pitfall and opportunity. So by now you guys know what a short squeeze is, but in a nutshell, basically you think a stock is overpriced, you think it's too high. So what you're gonna do is borrow some shares from your broker at that price, wait for it to drop down, and buy them back at the lower price, and return them to the broker, pocket the difference. Simple, right? Easy peasy. But what if some other investors think it is valuable, so they start buying them? I mean, or maybe they just don't like you. Either way, they start buying up shares, and that drives the price up. And now other guys like you, they have to buy shares back, even though the price is higher, to cover it, so that they don't lose everything. And this just goes back and forth in a feedback loop, driving the price up, making that pretty vertical line we've been seeing a lot of on graphs lately. Now, usually this reaches a tipping point and does the whole thing in reverse. The rocket crashes back down to earth. Unless, like the monster that is GameStop, there aren't enough shares available to buy back. Uh, but that's just a quick video to introduce the group, so I'll leave that alone for now. Um, Gonna give you just a quick example of how to play the short squeezes. I'm using the GameStop graph because it's just so pretty, but just pretend like it's a regular play. It's a normal short squeeze situation. So let's say you see a stock doing a short squeeze. It takes off. In this example here, from $40, $45, all the way up to $80. Doubles in value, and it levels off. It consolidates throughout the rest of the day, and then the next morning you see it shoot up in pre-market. Here's the previous day's graph, taking that nice parabolic run up about 100%. And what is that, about 100% in a 3-hour period? Not too bad, huh? Especially for a company that is pretty much on death's door. But so the next day in pre-market, you see it run up again. This time it goes up with 120% in less than an hour. So you want to get it, you want to play it, or maybe it didn't run the previous day. Maybe this is a new stock. Either way, a continuation or a new play. You can play it the same way. Now, so you're going to keep a close eye on it, right? At pre-market, you're not going to jump right in. They're never going to do that. Whether it's a short squeeze or a regular play, you're not going to jump in at pre-market because it's the most volatile time of the day. It just swings up and down. It's not predictable. And we don't chase plays, guys. Like, no matter the circumstance, we let the play come to us, especially with these short squeezes. So we're going to keep an eye on it. We're going to wait for it to pick a direction. Now, the first, right off the bat, mistake that most traders when they're new fall into is right here at the pre-market open. There's a little bit of a downward swing, and then this big, pretty green candle. A lot of guys don't want to jump on that. That's the FOMO. That's the first issue that you're always going to have to keep in your mind to avoid like the plague. So we're going to keep an eye on it, and we're going to wait. And about 45 minutes into the market, we see this vertical line here that's a doji, which tells us that that downward trend is probably broken and about to reverse upward, but we're still not going to jump on it. I mean, on a regular play, we might, but this is a short squeeze situation, a company without value skyrocketing, so we're being careful. We're going to be stock snipers. We're not going to be suicide bombers. All right, guys. So now we see that this reversal is imminent, so we're not still not going to jump on it. We got to have some technicals. Down at the bottom, you see the RSI is looking good. Now we had that crossover, the blue over the red. That's telling us it's the entry point time. So we jump in, we get our position open, options, stocks, whatever you like, and we ride that momentum upward. Now at this point, you can see at the bottom, the RSI is a little bit too high. That's telling us that the stock's overbought. But in this scenario, we're dealing with these hyped up short squeeze plays, so we know that that trend's probably going to have a little extra strength. So we're going to play that play out until we get a more of a confirmation that it's time to exit. So we keep letting it play, and now we're what are we, about 130 from our entry point was around 90, so we're already up about 40 bucks, but we're letting it run out until it gives us a good indication that the play's momentum has already run its course, at least for this portion of it. So we're staying in the play, but we're keeping a close eye on it. All right, now we're up about $70 a share, and that is a very substantial gain, guys. That is something to be happy with. And we're seeing that first red candle telling us that the momentum is slowed down. And since this is a short squeeze, we're going to get out of the play at this point. We're not waiting until the market punishes us, just like that. And the market will punish you guys. With these plays, you got to be in and out. As soon as that momentum slows down, we are exiting the play, guys. Not going to stick around and wait for the market to punish us. It is not merciful. It will do it every single time. So if if we were able to be disciplined and get out at that point, we just made a substantial profit. I mean, with options at $70, even if a modest $20 delta, we just even with a modest $20 delta, we just had a $1,500 contract gain. That's a good day. But a lot of guys would have held on, and at this point, you're going to see the number two very common mistake is after you lose those gains, you're going to want to stick around to try and hope for him to come back, and just wait and pray. So this is what we call hold and hope, which is the worst thing you can do here, guys. You got to cut your losses if you didn't have the discipline to stop, as if you don't, the market is going to punish you again. I mean, there you go. Just like that, guys. It's just that simple. I mean, it's a real simple play to make. It's just a matter of discipline. There's a lot of profit for in these short squeezes, but you got to be able to just get in and out. You got to be a stock sniper here. So we'll be posting in the near future some more in-depth and better videos. Don't worry. I just wanted to get this one going so we could get a little exposure to the group out there. Introduce you guys to it. So, like I said, our home base is on the Discord channel where we keep try to keep an up-to-date list of resources. We're gonna have we have a great group growing. Got about 40, 50 members right now. Just good conversation going at most times. We keep as you see here, we like to keep good resources posted and up to date. Upcoming catalysts, any kind of breaking news. We have earnings calls. We like keep you apprised of who's got earnings coming up, FDA approvals, anything, phase trials, anything that's gonna give you a leg up, an opportunity. Post a daily watch list of the best coming up stocks for the next day. Right now, obviously, it's the short squeezes. We do daily call outs, post our entries, exits, and plays while we're making them. Usually it's options contracts. You see here we do call, debit spreads, all types of option spreads. We post the results on a daily basis, everything above board. We got nothing to hide. We want you guys to know exactly what's going on. And we do believe in giving back to our members. So once we get the premium going, we will be giving out monthly prizes, holding contests, and giving out prizes to first, second, third place. The group is free for now. I mean, all the premium features, everything is free to check out. So I mean, come check us out, guys. Might as well give it a shot. Until the next video, I'm Ben. Thanks for stopping by.